Good evening, everybody. Hi, welcome to the webinar. My name is Kiana Danial. I'm the CEO of Investiva, and today we're going to have a great, awesome, spectacular webinar on smart strategies for British pound trading after the Brexit referendum. Welcome, everybody. Welcome, Lyndon, Michael, Sellerm, Terry, Zenelson, Al, Antonio, Ash, Barris, David, and all the ones who are just joining us right now. Before we start, please type in a Y for yes so I can make sure that all of you can hear me right now. Okay, we are going to get the yeses. Awesome. Thank you very much, Ash. And thank you, David. And tapping a double Y, thank you, Terry. If you can see my screen, the screen right now shows the topic of this webinar. And double Y, thank you so much, Sellerm. All right, so everybody is interactive today. I want to remind you that this is obviously a live webinar. And before we start, I'm going to show you a, risk warning. While I'm reading this for you, well, you can obviously listen to this, but as we get started, please go ahead and type in any questions that you have in mind while you are here. What do you really want me to cover today, so that I can keep that in mind as we move forward with the webinar. So with the risk warning, so obviously, as every time we say it, well, trading on margin can result in losses that may exceed your deposit funds. So before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite, because there is a possibility that you may sustain a loss of some or all of your investments. So we're here today to give you strategies that will have a very high possibility of, making money for you and growing your wealth. But you always need to keep in mind that forex trading is risky, and you have to have a proper financial plan before getting into it. All right, good, great. Thank you for listening to this. So today's agenda, actually that agenda is not correct. So today we're going to go a little bit about, talk a little bit about Brexit, what happened. We're going to talk about what is going on right now and what we are going to expect later. We're going to talk a little bit about UK economy, and then we're going to get to the good stuff, which is coming up with trading strategies for as many British pound crosses as possible. All right, are you ready? Great. All right, so let's get started. So I'm pretty sure that all of you know what happened during Brexit. So basically, the UK decided to get a divorce from the EU. We already have a question. Do you see UK lowering rates by end of the year? All right, we are definitely going to talk about it. Thank you, Terry, for sharing that question. So so that happened, and so we're going to see, so where are they now? There was a referendum, and 53% of the Brits voted to 51.9%, I'm sorry, voted to get out of the Eurozone on June 23rd of this year, while 48.1% voted to stay. So it was a very close referendum, but obviously the results were that the UK ultimately is getting out of the Eurozone. So let's see what is going on right now. So this is going to have a major effect on Britain and the Eurozone. It didn't have as much effect as we speculated on the US, while this might have an effect later as they get more into the talks about Brexit. So after the Brexit vote, the Eurozone leaders are struggling to paper over the division. So when European leaders gather in Slovakia this Friday to reflect on the future of the European Union after the Brexit, after the UK actually leaves it, so it hasn't left yet, right? So they have to do all the paperwork. And they're expected to stick to modest proposals in an effort to paper over deep divisions on the way ahead. And so the Brexit referendum raised fundamental questions over the future of the Eurozone, but instead of addressing those deep questions over whether more political integration or looser union is the answer, leaders are likely to focus on the few issues when they can agree. And so the European Commission President Jean-Claude Juncker said that never before have I seen such little common ground between our member states. So few areas where they agree to work together. So they want to basically work on their strengths instead of the weaknesses. So that is what Jean-Claude wants to move to proceed from now on, apparently. And so now, before the Brexit, everybody was saying, so if Brexit happens, the British pound is going to dive down and it's going to be the end of the world. And it was. After the referendum results came out, we all saw British pound lost ground versus virtually every currency, every major currency. It reached the all-time low versus the U.S. dollar. But now the banks are rolling back their bearish British pound forecasts, and excuse me, I had to take a sip of my tea. So the Brexit aftermath had confounded a lot of market expectations, almost none more so than British pound itself. In the first 2 days after Britain voted to leave the European Union, the pound plummeted by 11.8% against the dollar, but despite widespread bets that it would continue to tumble, it is still around the same level. It has actually gone a little bit higher right now. So now a number of major banks are actually backtracking on their initial bearish predictions, which, well, is a good thing for British pound bulls, right? So now the question is, what London economists think the Bank of England will do next? This is a key. So before I tell you what I think, let's see what London economists think. The Bank of England, this is according to Wall Street Journal, the Bank of England in August, last month, cut its benchmark interest rate to its lowest in its 322-year history. And so that revived a financial crisis era bond buying program to cushion the UK economy from aftershocks of Brexit. And but so this Thursday we just had the new interest rates coming in, and they decided to keep it unchanged. So after this, though, so that to answer your question, Terry, they did hint, however, that that there is a possibility of another interest rate cut from the Bank of England this year. That was a signal that they sent, and that probably can explain the bearish pressure on British pound. Well, we're going to talk a little bit more, and let's dive in more and see. So they hinted it, but let's see what we think about it, right? So European target growth, migrants with new investment push. The European Commission and the European Union's executive arm proposed doubling the duration and increasing the scope of EU's investment fund, in addition to setting up financing for investment in Africa and other neighbors. So the EU investment fund should aim to reach a financial capacity of around $561 billion by 2020. And that is a steep increase from the fund's initial capacity, which was around $350 billion. And in terms of labor market, unemployment in the UK fell in the 3 months through July, a sign that, well, British labor market held up well in the aftermath of Brexit. And so that was a good sign. But as you can see, well, this month we had a little bit of a worse outcome yesterday. I want to take a moment and welcome all the new audience. We have about 20 new audience. I think Beres Aburalaba, Judson. I'm sorry if I'm mispronouncing your names. Melissa and Mohammed, thank you for joining us. And Veronica, I see you. Hi. So, and you are welcome, Terry. And people who joined us right now, let me know if you can't hear me. I mean, if you can't hear me, you probably won't hear this question. But hopefully you can hear me and you can see the screen. Anyway, so back to the what's happening right now. So we talked about labor market. We're going to talk more about the labor market and what we're predicting is going to happen next. So right now, so what is going on with Eurozone's executives and the communication laws? There is so much that they have to go through, right? The European Union executive arm on Wednesday, they proposed a copyright and communication rules which govern areas including music licensing and emergency phone calls in an effort to shift the power from Silicon Valley giants to traditional media and telecom businesses. This is important because this shows that Eurozone is already trying to move on from the UK leaving them, and they are trying to basically make things happen on their own. So they're trying to become more independent, right? So and the Eurozone is also pushing ahead with harmonizing national insolvency law, and that is a plan to tackle diverging national insolvency laws that are seen as as a cross-border investment as part of its efforts to make a stronger capital market in the Eurozone. So these are good for the euro. Today, I know we were currently talking about the British pound, but we are going to also look at the British pound versus the euro itself. So it's good to know where euro stands. So so basically what it means is that the Eurozone is trying its best to make the world see that they are still capable of doing things without the UK on their own. So one other thing which is interesting for the UK, and it's kind of sad, is that Nigel, I don't know how you pronounce Nigel Farage, he admitted that the ambitious promises made by Brexit campaigners were mildly irresponsible. Mildly. That's what he said, but we all know that it was actually incredibly irresponsible. They made false promises. And so that is one of the reasons why many analysts are still bearish, both besides the banks. But in the long run, they don't know where the UK is going to be headed, and because a lot of British people who voted to actually exit, they were lied to. They thought something else is going to happen, but they're not going to happen right now. So as things move forward, we really want to see how the UK can survive this Brexit. But the good and bad news is that the negotiations are unlikely to happen before the end of next 12 months. That is, well, Herman Van Rompuy, that is his prediction that the Brexit talks between the UK and the rest of the Eurozone are unlikely to start much before the end of 2017. So this guy is a former European Council president. And so if he is correct, if he is right, then, well, that's basically takes away the volatility that was expected after a Brexit. The good news is for long-term traders and British pound bulls. So this could actually help the British pound to regain its ground and rise versus the major counterparts before Brexit talks actually start. You know, because when the talks actually start and they start that Section 50 and the lawsuits and everything, that will create a lot of volatility, and that could probably put a ton of pressure on the British pound. But if this is going to take as long as 12 months, then the volatility obviously this year is going to be less. And we can shift our focus to UK economic data as if it's before Brexit. So it will be like we will be going back to our normal strategy development for the British pound before Brexit ever happened. So that means, well, looking at the PMI, looking at the inflation, looking at jobless claims, looking at retail sales, interest rates, and all that. So let's take a look. How has the UK economy been doing? So in September, so we had better than expected PMI. I'm going to go to the economic calendar and show you the results as well. The CPI was unchanged from last month, but it was worse than expected. So this worse than expected data, just so you know, those make an immediate volatility after the data is released, but they don't have any a long to medium-term impact on the general movement of the currency, right? So the reason why, so that is called speculative trading, which I do not do, but the actual change from last month, the trend of the changes in the data, that is what helps you develop a medium to long-term strategy, which is my method of trading. Jobless claims this month it was worse than expected. It was worse than last month, but before it was actually pretty good. So it's a little bit of a mixed outcome. Retail sales were better than expected. That was good. And interest rates, well, they kept them unchanged as we just talked about it. So that basically everybody voted to keep it to hold it unchanged, but the policymakers indicated that there is still a chance of another rate cut this year because they're assessing the potential longer-term fallout from Brexit. So here's where I'm having a little bit of a dilemma, right? So if we think that what's his name, the Herman Van Rompuy, he's correct that we're not going to see the talks to start within the next 12 months, then an interest rate cut might also be delayed. But if we see the talks starting earlier than that, if we start the talks starting in December or even like beginning of 2017, that is when we could actually expect another rate cut to kind of balance out the turmoil that is going to be caused by the Brexit talks. You understand what I'm saying? So as long as there is no more turmoil, there is probably not going to be another interest rate cut. When the Brexit talks start and the law enforcement is going to start, that is when we're going to see the potential of the interest rate cut increasing. All right? Okay, so that was an exact 18 minutes rant on the fundamentals. Does anybody have any questions before we get to the technicals? Hey, hi, David. Okay. Is this live or recorded? This is live right now. It will be recorded. I definitely encourage you to remain on the line and live until the end of this, because at the end, I'm going to give you some very juicy goodies. So definitely stay with me. All right, we're getting a bunch of questions. Let's see. I just messed up. How long does this webinar take? It takes an hour. So from now, it's going to be another 40 minutes. All right, do we have any British pound related questions? What fundamental conditions allow for the rate cut besides the Brexit? Well, that is a very good question, Veronica. So a rate cut normally happens to tame inflation, right? When you cut interest rates, the inflation goes higher. So if you see lower than expected inflations, so right now, for example, the CPI is the inflation, right? So if you continue to see further lower than expected inflation results, that is what can bring up inflation talks as well. I'm trying to get my questions. Oh, there it is. All right. Hopefully I can see all the questions. 1 second. Received. All right. Let me see if we have any other questions. All right. So yeah, these are okay. These are for now. So let's go and take a look at all right. So I like to use here. Okay. All right. So we are first going to start with pound dollar. Always have to start with, unfortunately, a pair. And hopefully we're going to be able to cover as many. All right, everybody has my chart? Great. So the first step, so we're looking at this naked daily chart of pound dollar. First, let's see what has happened on the monthly chart and then zoom back in, all right? So this is the historic pound dollar chart since its inception. 1972 is the latest that we have. Pound dollar in 1985 almost reached parity, 105. And after that, its range had basically been between 141 and around, well, this is the medium change, and 2, right? And right now, it is basically at a, well, since when was the last time that the pair was 142? So we are now at 606, so 30-year low at the moment, which is pretty crazy. All right, so on this, I'm going to add my favorite indicator, which is Ichimoku, and start our technical analysis based on that. And so obviously the pair is right now below the Ichimoku cloud. That already, the signal was already made back in 2017 at our pivot level right over here is at 140. Well, that is basically the level, a long-term level. And, well, this is the level that it is now, so I'm just going to mark it up as well so you can see it. 131 is almost the level that is a 30-year low. All right. So now you can see the cycle. One thing that I want you to realize that for long-term traders, you can always be sure that as long as you stick to the medium range, right? So medium range, but medium range, I mean not the lowest low, not the highest high, but somewhere in between. You're eventually going to make money in Forex as long as you hold on to it. All right? Because the market's moving cycle. They always, for example, what is the medium range over here? The medium range of pound dollar that it hits at least every year is 162, right? So one strategy, one long-term strategy, and I mean, my students know that I'm a big fan of long-term strategies, is that, well, depending on the interest rate that you're going to pay for overnight holding of your trades. Oh, actually, I have to give you one secret that is very important. All right. So I'm not going to give you day trading advice today, just so you know. If you're a day trader, this is the wrong webinar. This is the medium-term to long-term trading advice, all right? So when you are a medium-term to long-term trader, you need to understand that you are either going to make money by your overnight trades or you're going to lose money. And for now, all right. And so the way that you understand, the way that you learn, you know that is when you open a platform with your Orbis platform, right? You have to go and see what interest rate is the interest rate that you're paying. It's called the rollover, right? Is it positive or negative for a bullish or bearish position on this specific currency pair? So sometimes if you're in a bullish position for pound dollar, you have to pay an interest rate per night. If you're in a bearish, you're going to make an interest rate. So if you're a medium to long-term trader, always make sure that you have a positive rollover, which means if you're in this position for even a year, not only you're not going to lose money, you actually are going to make money. All right. So that is the number one rule. I have it in my book out. It's called How to Steal Money from Your Broker. So I'm going to actually share it with you later, which goes into detail about how you can do that. And so that is number one rule. Number two is that so when you have identified this medium range for this currency pair, then you decide if you want to go bearish or bullish based on the strategy. And so if you're going to go bearish, right, you can go bearish here and then find the other and target the second medium range, right, which is around here, right? So this is before. After Brexit, the medium range has changed. Right, we're talking about this. So these are you see how many times the pair has hit this medium range at 160 and also at 156. So between this, you're very likely to make money at the end of the day if you stay in it long enough. But right now, the medium range has changed because of Brexit, and therefore we have to turn back to the daily chart to see what is going on over here. So interesting things happening right now with the British pound. We had a formation of a double bottom before. I am going to mark that for you. We want this icon. This is the first, and then this is the second. Everybody can see the double bottom? First bottom, second bottom. So that was a signal of a reversal, but it was not able to break above the neckline. Can everybody see the neckline of this double bottom? It's around here. It still hasn't been able to break above this neckline. This neckline is a pivot, therefore I'm going to color it orange. All right. It did reach the Ichimoku cloud, which was a very good achievement for the pair, but then it headed back, because we just covered all the negative data that came out of the UK. This one was in August. We had really spectacular outcome from Britain, so that really helped with the British pound to recover. Actually, the history of this double bottom is that after the Brexit, obviously, this is how it, within one day, this is how much the British pound dropped. The next day, it dropped this much. And then after the first month, it started to recover. So that was a normal market correction that we were expecting it, right? Then it consolidated. This one was due to worse than expected data. This one was due to better than expected. Now we again had a bunch of worse than expected data, and that is when it's turning again back down. So now it's actually very interesting. It still hasn't broken below the Ichimoku cloud and this level of 1.31. If it does break below the Ichimoku cloud, that is a signal for short to medium term traders that the market could actually go back to 128 one more time. So that can be so this is your first strategy. Everybody's writing it down? You're writing this down. So if the market, if the pound dollar pair breaks below the Ichimoku cloud, that is a short-term signal for you to go bearish on pound dollar and target a little bit above 128.83. The reason why I say a little bit above is that because sometimes, even though it's a bearish signal, and even though this is a very strong bearish target, sometimes the pair doesn't quite reach that, and also your broker may not fulfill it because a lot of people are targeting that. So it's always safer to have it a little bit above your target. So basically having your target a little bit above the support so that you ensure execution of your exit. All right, so let's say, so this is our first strategy daily on the daily chart, right? Wait for a break below the, so all the data from the UK, important ones are out right now. So we have a little bit more of a space to play a medium-term strategy, right? So wait for a break below the Ichimoku cloud. If it does, target a little bit above 128, let's like 129, and voila. So after that, so what happens if it does reach 128, right, and Brexit talks don't start, right? So in that case, it probably is going to restart going back up. And in that case, we're going to have a formation of a triple bottom, right? Even a stronger bullish reversal indication. And look at the Ichimoku cloud over here. The Ichimoku cloud was incredibly thick over here. But the next Ichimoku cloud formation, you see here, this is going to be pretty thin. We already know why, because the pair has basically been consolidating. And so after a break, so this is what I'm estimating that is going to happen if it actually, in fact, breaks below the Ichimoku cloud, right? We're estimating that the pair is going to move down. It's going to move around to here. By the way, hold on. Don't make any trades right now because I have to tell you like the alternative view, all right? So we could expect, so the bearish scenario is that it goes over here, forms a triple bottom, and then restarts going back up. Then the resistance is going to be again right here, and then we have a thin Ichimoku cloud over here, right? That is going to be, then it's going to be easier for the pair to break above the Ichimoku cloud. And if it does, that is definitely going to turn our outlook to bullish. The first target is again going to be 133-ish, right? If it breaks above that, then we could see even the pair going back to 140. So here is the unfortunate news. Unless something really good happens in the UK, like they come up with spectacular plans with the Brexit, and they have really good jobs reported. They have even better inflation. Reaching 140 within the next 6 months is a little bit unlikely from what we're seeing right now, right? All right, so that was a bearish scenario if the pair breaks below the Ichimoku cloud. The bullish scenario is the opposite. If it actually from here, this support level holds. Actually, I need to do a Fibonacci over here. Our levels a little bit better. So the 23% Fibonacci also falls on this level, which shows how important this level is. And a break above it, our like most likely and less risky resistance level is right here at 38% level at 136.90, almost 137. Can everybody see this? Oh, we have a question over here. We have a question about pound Swissy. Any thoughts on the data from Switzerland of last month? All right, we might be able to get to Switzerland later, Terry. Thank you for the question. All right. So bullish scenario, right? A bullish scenario is if this lower band of Ichimoku cloud holds the pair and the pair breaks starts moving back up. So if it holds, you will see that it's holding, right? The short-term scenario strategy is targeting 133. A long-term strategy is waiting for a break above 133 and then targeting 136. The medium right now, so you know how I talked about mediums and the British pound. Range trading, I mean, the pair has very vividly been consolidating between these two ranges, between 128 and 133. And since it has been doing that, well, our medium range is obviously this 131. So our likeliest bet at the moment for a short-term trade still is bearish because the range trading, getting out of a habit of a range trade for a pair or for a currency for any stock, any instrument is pretty hard, right? So we could see like this 131 reaching 131 is pretty likely for the pair. So if any of you is pretty as a medium-term trader, your risk reward for reaching 131. Sorry, all right, I actually do have an account with them. All right, so we're at British pound. Oh no, hold on one second. My apologies. All right, so that was that for the British pound. Unfortunately this actually went out of. So next, we're actually going to cover the next important pound cross. I would like to. You're welcome, David. Thank you for the nice words. All right. So everybody wrote down the strategies for pound dollar. All right. Oh, Rick, look who's here. How are you? Okay. So next we are going to cover pound yen, right? All right, so every fundamental that we already talked about on the UK side is still going to be true for pound over here. And the Japanese yen, well, has started its strength ray in the past, well, since the beginning of 2016, right? And the Japanese government is doing everything that they can to stop and put an end to yen strength, but they haven't been very successful at it yet. So I'm not going to talk about the Japanese yen today. I'm going to do another technical analysis based on the fundamentals that we talked about on the UK side, and come up with a strategy for you with the pound yen pair as well. All right, so as you can see, the pound yen is actually pretty similar. The drop after Brexit and the way the pair has been moving, it's pretty similar to the movements that we saw in the pound dollar pair. All right, let's again with this one, let's start with the monthly chart and see what the medium range is for this pair. Right? So this doesn't go as long as pound dollar. The pound dollar historic chart started at 1985. This one actually was 1975. This one starts at 1993. So we have less data to look at, but still we can figure out the medium range that we talked about before, that anybody can basically make sure that if they stay in that trade for long enough, they're going to hit that level. And that level is around this, right? The level that the pair has hit the most. So from here, right, all the way around this level, right? So this is a very long-term medium range that I want you to look at. All right, but obviously right now the pound yen also is way below the Ichimoku cloud, but the difference between pound yen and pound dollar is that the pound yen hasn't even reached the most recent low of pound yen, which was back in 2012 at around 120. So that is a little bit frightening for pound bulls when it is trading versus the Japanese yen. Why? Because with pound dollar, we are right now at the 30-year low. With pound yen, we're not even close to where it was only 4 years ago. So the chances of the pound yen, so pound dollar could possibly do everything that it can to get itself up and move forward back up to its medium range, but the medium range for pound yen is a little bit lower. You see, so we have had many instances that the pair has actually hit the current level at 135, right? So with that, we have a little bit of a higher chance technically for the pair to go back to 120, which is actually pretty frightening for myself because I still have bullish positions open on pound yen, and I have not closed them, and I know that it is going to at some point move back. And because I'm a long-term trader on this one, collecting all the interest rate rollover fees, I'm going to just wait it out. So one strategy right now, we already have had on the monthly chart, so this is for super long-term traders. On the monthly chart, we've had the pair breaking below the Ichimoku cloud. We've had our first signal, and we have our support set at 120, and the sentiment, and even within the past 3 months, we've had the pair actually reaching 129. Right now, it's kind of consolidating. So from the monthly chart, we don't have any further bearish signals. We don't have any other chart patterns. Well, this one actually right here, we had a spinning top chart actually formed over here, followed by a teeny tiny bearish engulfing. We're not sure if this is going to, if this continues to, we have 15 more days in September and, well, 2 weeks, not exactly 15 business days left in September. So if this candlestick really starts forming to be a longer bearish, which makes it an actual bearish engulfing, that could increase the potential and possibility of this pair to reach this 4-year low at 120. So no immediate strategy for this in the long-term perspective. Let's see what the daily chart tells us. All right, the daily chart, the pair has been below the Ichimoku cloud for quite a while, right? And we do have a break of the Tenko line below the Kijun line, but then again, this is not a clear indicator. Another indicator, I mean, with the Ichimoku cloud, we're already out. Like the Ichimoku has done its part for us already. But one other thing that we can see over here is the formation of another double bottom that we also saw at with the pound dollar. So here you can see the one top and this one. It hasn't quite, the differences between this and pound dollar is that the pair didn't quite reach even inside the Ichimoku cloud. The Ichimoku cloud here has been on a long-term downtrend for the past 6 months, and it hasn't been able to even break inside the Ichimoku cloud. So this is actually one of our first strong bearish signals when it comes to the pair. And so let's go for a medium-term target and strategy for you guys. We already have had all the data for this month out, so that's why we're only doing technical analysis on this from this moment on. As long as the pair is below the Ichimoku cloud, we still have our bearish signal out. Let me actually take a look at the market. So yeah, so and the interesting thing is that the majority of traders right now are bullish on the pair because they think that the pair has bottomed out. It did bottom out before. I did send out a signal on our premium Facebook group back in August that the British pound has bottomed out. So get in now, and we targeted here. We made some pips. That was good. But right now, it's no longer. So the people who are delayed on that and they think the pair might go above there are more people thinking that the British pound might go higher. So that actually we can use as a contrarian indicator, and that gives us yet another bearish signal. So again, with the risk reward involved, we could say that the British pound could see further pressure. This is less likely than the pound dollar. So again, if you are into trading the pound, I would recommend with pound dollar we had more significant signals than here with the pound yen. But then again, we have at least two bearish signals over here going on. Our first support is at 129.90. It's around 130. I would definitely recommend that you don't go all the way down. You could, if you're doing a medium-term trade, I recommend that you target a little bit above 130. And then for long-term traders on the monthly chart, if the pair does break above this, below this one, that is when doors will be open, further drops towards 120. So for long-term traders, you might want to actually wait a little bit. And so that was a bearish scenario. The bullish scenario is that the pair actually gets inside the Ichimoku pattern, breaks above it, and confirms above it. That is when our long-term outlook will change into bullish. First target would be, all right, so as you can see, this 23% Fibonacci falls almost at the same level of the Ichimoku cloud, which is what I like to do. I like to combine Fibonacci. So this is a, well, short to medium term resistance. However, this is a medium to long term pivot level. And it shows how important this level is. So therefore, a break above this level would signal a long-term reversal that could actually take us back to where pound yen was before. This is very unlikely to happen at the moment because we don't have any signals available, right? Our first pivot for a bullish scenario, however, is this almost neckline of this double bottom over here. It seems that my audio was out for a second. It is back right now. Oops, we've had a bunch of questions over here. All right, hopefully I can get to questions before we finish. So, where were we? Okay, the short to medium term bullish scenario. As I said, bearish scenario is more possible at the moment. We don't have almost any bullish signals right now. However, our first bullish signal would be when the pair reaches this 140 and confirms above it. That will be the neckline of this double bottom, and that is when we can go ahead and, based on our risk tolerance, we can target the 23% at 145.50. I would target a little bit below it, which would be 145, right? And another scenario, bullish scenario, is, well, when the pair actually reaches 129, or when and if the pair actually reaches 129, is protected, is supported by it, and starts going back up, right? That is going to be another, going back up from this level shows that the pair could be in the process of forming a triple bottom pattern, right? And if you get a bullish engulfing signal, that will be your second bullish scenario. All right, looks like my audio was lost again. Can you please verify they can hear me? It seems like the audio is back now. Can you verify if you can hear me? Yes. Okay, great. Okay. Something went on with our GoToMeeting. All right. So where were we? We were talking about a potential of a triple bottom. If you see a bullish engulfing forming, that would be your bullish signal targeting the neckline at 140, and then again from there you will wait for a break above that. So these are all long-term strategies that you can keep in mind as you check your pound yen pair. All right, so I'm going to also Terry asked me to cover pound Swissy. Okay, so as you can see, these are all very similar. After Brexit, basically every major currency pair formed very similar patterns. You see the double bottom over here as well, trying to get into Ichimoku cloud. Pound Swissy also kind of got inside without really succeeding. Let's take a look at the monthly chart and see if our bearish scenario is actually strong. Okay, so with Swissy, okay, look at that. So this is back in 2019. Oh my God, 74 is all the way before I was born. So this is when pound Swissy actually started. And since then, it's been correcting, not correcting, pulling back. It had a very awesome year in 1975, and then it has been just correcting its gains. So again, so this one, going back to the 1974 levels, sounds a little bit unlikely at the moment, right? And the medium range is not as, so the cycle, so with pound dollar and pound yen, the pair has been moving in cycles. With pound Swissy, it's been just moving in a downward trend, a very 40-year-long downward trend. This is not even a channel, it's kind of a trend. Let's see if it actually fits in the channel. If I could find the channel. All right. Change their stuff every 2 seconds, so it's very hard to keep it. All right, there you go. So if we try and put this, visualize it within this channel, this is what we get almost. Right? So it doesn't quite fit in the channel, but you can still see how the pair has mostly routinely been in a downward movement. So with that, and the most recent break again below the Ichimoku cloud, I mean, it's been, the pair has spent most of its time below the Ichimoku cloud on the monthly time. And we had, after the Brexit, we had yet another break below the Ichimoku cloud. I mean, it tested above the Ichimoku cloud very briefly. It wasn't able to keep it, and still below it. It's been consolidating right now like any other pair. So with this, the long-term plan, it's a little bit hard to see a very long-term plan. I cannot tell you if the pair is actually going to reach 0.11. But another interesting level is where it is actually right now. Right? So this is the lows from 2011 and 2013. 2014. No, this is actually the day that the Switzerland, Swiss took they jawboned the currency, and so this level is right now pretty critical. And as you can see, the pair has been consolidating around it. So our first bearish signal after this long term would be if the pair actually breaks below it. As you can see, each time that it has reached this level in the past 5 years, it has tested below it and then went back up. This time we've had a longer time around this level, so which makes this level actually even more important. If it does break below it, the only way that we can find out where it's going to go next, if we do a Fibonacci retracement level from here. Right. Yeah, this is not actually giving us a good picture. I really don't like this. What we're getting right now. I would say our first bearish signal, if the pair actually does on Brexit talks, when the Brexit talks start, our first bearish target after a break and confirmation below that level would be 114. All right. So that was a monthly chart. On the daily chart, we could very well, just like pound yen and pound dollar, we could very well see the pair to go back to this level. This time, however, as you can see, this is an angled double bottom, and there is a very good chance that this turns into a head and shoulder instead of a triple bottom, right? And so that means that if you are, I mean, this is a bearish signal, so your best bet would be a short-term, your best target, bearish target for this would be a short-term target targeting this level, 126, as opposed to 124, because this could be forming a head and shoulder pattern. Bullish scenario, again, exactly like pound yen, we don't have any signals at the moment. Our first scenario would be a break above this level, above 130. That would bring us to targeting 134, but won't change our long-term outlook unless it breaks above the Ichimoku. All right, so these are the levels that you want to keep in mind. All right, so before we go, I would like to, well, I know that I'll promise you if you stay with me until the end, I'm going to give you some goodies. So we already covered pound crosses. This was investiva.com. Definitely go ahead and subscribe over here on investiva.com. And today, because you stayed with me all the way till the end, I'm going to give you some goodies that you are not going to regret. So if you want my book, right now the price is actually $31.99. If you want my book, I'm going to, in the chat box, I'm going to give you a link that will get you the discount to my ebook with the bonuses. So if you're new to currency trading, definitely go ahead and see that. If you want my currency, the 30-day training of Forex trading, normally, again, this one is $997. We have all these fun bonuses over here. So all the webinars, our premium Facebook group that I talked about before that I give out all the signals. So you get all of that for 75% off. So I would also like to give you that as well here, so you can get if you have any questions, if you have any recommendations for next webinar, well, next webinar we know that we're going to cover Kiwi dollar, but for next month, if you have any recommendations on what you want us to cover, feel free to contact Orbex at info@orbex.com. And they will be sending you the recorded version of this webinar. You will not be getting the links over there, but everything that the strategies that I shared are going to be, the full version of this webinar is going to be in that recorded video. So definitely be in touch with them as well. Again, thank you so much, Al, Aburala, Bob, Barris, David, and other David. And oh, we had 3 Davids today. That's crazy. Lyndon, Maria, Melissa, Michael, Mohammed, Rick, and Rich, and Celeram, and Terry, and Veronica, Danielson, everybody. Thank you so much for joining me today. And I hope I'll see you next week. All right? Have a great day.